Hey, welcome to Satisfy YouTube channel. In my channel, we talk about personal finance, money, and everything in between. Today, I'm going to talk about my home buying experience. And I think property is something that a lot of Singaporeans actually are very fervent about. We like to buy property, we like to discuss property, we like to view showrooms. And so I think it's a topic of interest to a lot of my friends and viewers. So I just cut my hair, I'm wearing a shirt, feeling formal, so let's get into it. So my home buying journey actually started many years ago. I think as early as 2017, where I decided that I want to move out. It was a very random thought. I think I argued with my father, and then I decided, I want to move out. Okay, the argument was quickly resolved, but the feeling didn't go away. I think it's just natural when you reach a certain age, you actually start to think of moving out. So I started shopping around and realized that, wow, property prices in Singapore is really very expensive. So I was looking around at that time, I didn't really have the money to put down for the down payment. So I was a bit dejected, but I continued to save so that one day I can afford my own place. So in 2019, I decided that I've saved enough. I'm now going to shop even more seriously than before and started to view more showrooms. Incidentally, I think the rules were changed. So the deposit went from 20% to 25%. So before you can take out a loan and buy a property, you must pay at least 25% of the property price. And by then, it's been a couple of years since 2017 and prices actually went up. So I thought that I was constantly chasing something that was increasing, and I feared that I did not save enough to handle the increase in price. Okay, so I remember feeling very demoralized because I was looking at units within my price range and they were all like very tiny shoebox units. There was one unit that was very near the MRT, but unfortunately was also very near the train tracks. So when the train passed by, you can actually hear the rattle of the tracks, and it just felt very depressing. So I remember feeling very sad and dejected and feeling like I'll never be able to afford my own place until I chanced upon a listing on one of the online property portals. And I thought the video looks good, maybe I should make an appointment and then view the unit. So I remember the unit was on the 21st floor and it was 750,000, which was slightly above my price range. And I actually liked the unit so much that I thought if they reduced it to 700,000, I might just buy it. My budget was actually around 600 to 650,000 and I was hoping not to exceed $700,000. Unfortunately, the owner wouldn't budge and I decided to look around in the same development for other units. So of course, like any potential home buyer, I also considered new launches. But I was already 31 at that point. I was thinking if I were to buy a new launch, I have to wait like 3-4 years for it to complete, and that would be 35, and I might as well just buy a resale HDB at that time. Also, I wanted to move out when I was still relatively young, live my life as a young adult alone. And 2 to 4 years wait was not going to cut it for me. And also, I wanted to view the unit before buying. I never got how people can plop down hundreds of thousands of dollars on new launches when you can't even see the actual unit itself. Sure, you see the showroom, but you can't really see the actual unit, how the sun hits the tiles, how everything looks. So I'm someone who's very visual. When I want to buy something, especially something that's such a big ticket item, I want to see it, I want to experience it in person. So within the same development, there were a lot of other units for sale, which was kind of a bit of a red flag for me, but it also meant that I could shop around the units and pick something that I really like. Unfortunately, most of the other units were either priced too high or they just didn't look as nice as the first one, until I found one that was actually affordable. And the layout was actually very similar to the first one that I viewed. So after seeing the unit that I liked, I went to look for an AIP loan, which is Approval in Principle. Basically, you go to bank and say, hey, I'm buying a property. I just want to know that I can qualify for a mortgage with your bank so that I can purchase the property successfully. So at that time, I used a mortgage comparison tool to make sure that I was getting the best deal available. If you want someone to advise you on mortgage and compare mortgages for you, right? Check out the link in my description and you can get a free consultation. No obligations. If you feel that the advice given to you is not appropriate or not the best deal, you can find something yourself. But I can be quite assured that they are good, okay? They're quite reputable. You can see more info down the link below. So at first, the unit was going for $730,000. It was slashed to $715,000 and eventually I managed to talk it down to $690,000. So $690,000 was below my maximum limit, and so I made an offer and the seller actually agreed to the price. So the first payment was 1% or $6,900 of the purchase price so that I can purchase the option to purchase. So basically it's like a deposit to tell the seller that, hey, I'm a serious buyer and I want to purchase your property. So after getting the option to purchase, I had to hire a conveyancing lawyer to process the paperwork required for the purchase of the unit. And I researched online and most people were saying that it costs anywhere between $2,500 to $3,000, and I found one that did a job for $2,300. So within 2 weeks of getting the option to purchase, the seller confirmed the sale, and then I had to pay another 4%, which is $27,600. Now the first two payments total up to 5%, and this must be in cash. So after paying the first 5% of the total property price, you have to sign a sale and purchase agreement. And after that, you need to pay BSD or ABSD. So basically your buyer's stamp duty or additional buyer's stamp duty. So I had no property at the time, so I did not have to pay additional buyer's stamp duty, but the buyer's stamp duty still applies. So buyer's stamp duty is a tiered system. So you pay anywhere between 1 to 4% on your property price. The first 180,000 is 1%, then the next 180,000 is 2%, and then the remaining amount below 1 million will be 3%. Anything above 1 million is actually 4%. So I had to write a check of $15,300 to IRS because the only two things that are certain in life, death and taxes. And then there's a valuation fee. I think the bank requires your property to be valued, and that cost me $328. And also I had to purchase a compulsory insurance for the home, which was I think $55 a year or something like that. Now after the 1% and 4% fee, you can actually start using a CPF to pay for the remaining amounts. But because I have been self-employed for my entire life, I actually did not have much CPF in my OA anyway. So I used cash to pay for all these. Now after coughing out more than $50,000 in cash, I still had to wait about 3 months for the sale to be completed. After eagerly waiting for 3 months, the time finally came and I had to pay the balance 20% with either cash or CPF. And again, because I did not have much CPF, I had to empty out my entire bank account, and that didn't feel good at all. That's $138,000 at one go. Ouch. And so by now, I have paid 25% of the property price. The mortgage kicked in and paid the seller the remaining amount. So I was now a property owner and heavily in debt. I didn't do much renovation for my unit. In fact, I didn't do any renovation at all. The unit that I now live in is actually relatively new. I like the layout and I actually don't see much I can renovate. So I actually save a lot on that. And so I just bought some furniture to the tune of about $5,000, and that includes my TV, my gaming chair, my table, and that was it. So after completing a purchase, I now had to pay the monthly mortgage of $1,875. And because it was a condo, it also came with a maintenance fee of $250 a month. So the property actually came with a tenant, and they actually wanted to renew their tenancy, which was ending 3 months from when I completed the purchase. But I wanted to move in because that was the whole reason why I bought a resale apartment in the first place. And I told them, unfortunately, no, right? But if you made me an offer that I couldn't refuse, well, I can't refuse, right? They actually didn't even bother making an offer. They looked for other places, and I moved in phase 1, which was in June 2020. Full 6 months from when I decided to make an offer for the apartment. So for about 3 months, I got the taste of being a landlord. I was collecting rent checks every month. Well, actually, can I call them rent checks if they pay now me? Well, and that helped to defray the mortgage for the first couple of months. But when I eventually moved in, I had to pay everything on my own, and including utilities, broadband, etc. So my monthly expenditure on the house will be the mortgage, $1,875. My maintenance fee, about $250. My utilities, around $60 to $70. My broadband, which is about $40. So my monthly expenses come out to about $2,235 every month, living alone as a single person in my own condo apartment. Also, I'm spending more on food because I can't cook, so I'm eating out more often. And groceries for a single person is actually also quite expensive because things go bad, you can't buy in bulk, and it just ends up becoming a chore to cook for myself. Now, if you're looking to buy your first home in the near future, I have a few pieces of advice for you. Number 1, get an AIP loan. Without an AIP loan, it can be quite risky for you to purchase a property because you might end up forfeiting as high as 1.25% of the property price. When you pay the 5% fee, you actually have to forfeit 25% of that 5% fee if you actually cannot secure a loan to purchase a property. So an AIP loan is very important for you to ensure that you can get a mortgage when the purchase goes through. Number 2, you should use a mortgage comparison tool so that you know that you're getting the best deal for your mortgage. Personally, I'm refinancing soon, and I'll definitely be using the link below to search for the best mortgage deal for myself. Number 3, you should spend some time to hunt for the perfect unit. I think it pays for you to go to more launches, more showrooms, look at more resale units, because you never know when you'll find something that's really suitable for you. Property is a highly subjective thing, right? Something that may appeal to you may not appeal to someone else, and vice versa. Even within the same development, there are some units that are much better than others in terms of price and maybe even view or layout. So it pays to do a little bit of research and spend a bit more time to look at multiple units or even maybe multiple developments to find something that you really like. Now, this also depends on how good your agent is. My agent actually showed me 9 units within the same development, and so I could actually pick the one that I felt was the best for me in terms of layout as well as value. Now, I know it can be a bit tiring because it takes time and effort to go and view all these units. So I actually hated the property search, but I'm glad that I viewed all the different units because I got something that I felt was within my price range, as well as something that I really liked. My last and perhaps most important advice is don't buy outside your budget. As tempting as it is to push your budget higher so that you can buy something that is nicer, affordability remains a very important thing when it comes to property purchase. While there's a lot of joy in finally being able to call somewhere your own home, the joy is actually very easily outweighed by the financial burden of buying something that you cannot afford. So I would say do your sums, go and work out how much money you have, how much income you have, and buy something sensible. Personally, I think that keeping your budget within a third of your monthly income should be a financially prudent thing to do. If you're still saving up for your first home, hang in there, try to save more, try to earn more, and eventually you'll be able to afford the place of your dreams. Now, I hope this has been useful to you if you are looking to buy your own apartment. And if you like more property related content or want to know more about my home, you can leave a comment below and maybe I can answer your question or even do a whole new video on the topic that you've raised. So let me know in the comments below what you want to know about my home or any other property related matters that you want to ask. As usual, your likes are appreciated, your comments are loved, and I hope you'll subscribe to me so you can see more of my content and also join my Telegram group, and I'll put all the links below. Thanks for watching and I'll see you next video. Okay, so I guess the logical thing would be to have a home tour here, but it's a bit messy now. I'm revamping my work from home space. And by revamp, I mean clear up the mess that have been constantly piling up on my desk. So, next video.